We're officially here, and I'm so excited to be here at the launch of Rich Retirement TV in this live stream. And I'm here, I'm Beau Henderson, a retirement strategist, and I'm here with Zach Sheidt, who many of you know. And Zach, I'm really excited about what we're doing, what we're rolling out today.
Yeah, this is exciting. We're coming to you guys live. We've got producer Carl in the room with us.
Hey.
We are we're off the cuff, making sure that this thing gets rolling. So if you are joining us right now, please do leave a comment on the Facebook Live page, and just let us know that you're here, because we're excited to have you. We've got some giveaways that we're going to be handing out later in the show, and we need to know you're here to be able to give you those giveaways.
That's right.
And gosh, a whole lot of stuff that we're going to be covering here.
Well, let's even tease that. So when people hear giveaways, Zach, tell them what they're going to get. I've got a couple of the customized Social Security books that we can give away.
Yeah, I've got actually a $200 Tiffany pen.
Oh, you got me beat right there.
And we got some Big Book of Income copies that we'll be sending out as well. So a lot of great stuff for you guys to build your rich retirement and to be able to enjoy that. And most importantly, some great content that we're going to be talking about to help make sure that you are well prepared to live retirement in a rich way. And that means financially, that means with the relationships that you have. There's so much that goes into a truly rich retirement. And that's why I love what we do, is because we go beyond just the financial aspect.
Right.
There's so many different areas of life that we can jump into. So
Well, and I think that's the key, is this is about conversation. We want to hear from you. What do you want to hear more about? We want to hear your engagement. If you disagree with me and Zach, by all means do. And let us know your point of view, your thoughts, and we're going to share with you kind of our takes on things. And we're just really excited to be a resource. We curate a lot of content every week, and we want to know what are the topics you care about. And that's really why we do this, to be a resource for you. So let us know what you'd like to know more about. We got questions that came in this week, and I think it's time to jump right into it.
Yeah,
you want to describe kind of our first segment?
Yeah, so we're going to be setting a timer for 10 minutes for each of our segments, so that we stay on track, so that you know how long we're going. Hey, Rudy. Rudy just said hello from North Carolina.
North Carolina, first, okay.
Yeah. If you are here, just make sure you say hello to us, so we can talk to you as we get started. Oh man, we're already into the first 10 minutes.
I started 10 minutes ago. We got to keep it moving.
So we've got some current events that we want to talk about that are going on in the market or in our economy right now. And Beau, you've got a few of those listed, so we're going to cover those in our second 10 minutes. We're going to get to all of your questions, and then we'll wrap it up with the prizes and move on, let you move on with your day. So, Beau, what's the first piece that we've got as far as current events and current issues that we're going through right now?
Kind of an in the news idea. I was reading and curating content this week, and I was like, you know what, I really want to bring this up. I think this will be a good conversation. Jesse Pound at CNBC put out an article this past week. There's nearly $5 trillion parked in money markets, as many investors are still afraid of stocks.
Yeah.
So there's a lot of money, a lot of liquidity. People are somewhat on the sidelines, and is that good? Is that bad? I've got some thoughts about that, but why is it happening? Any ideas?
Yeah, so while we saw the coronavirus crisis, it caused a lot of people to pull out of the market. We saw the market dip because of that, and then things have slowly come back up with the Fed stimulus and government stimulus coming in. But the article still says there's $5 trillion parked in money market accounts. Beau, as a retirement expert, when people have cash, they don't have anything to do with right now, they put it in a money market account. But when they start feeling more confident about investments, when they start feeling more confident about opportunities to put that money to work, then that money goes to work. So if there's $5 trillion, which is pretty close to a record,
right.
$5 trillion on the sidelines, that's money that, in my opinion, can come into the market. So it's money that's basically dry powder waiting to be lit, waiting to be sent into the market, which is why I feel a lot more confident about the prospects of the investment markets right now, even though we've got this economic crisis and the coronavirus issues that are going on right now.
Well, and I'm with you, Zach. I like this idea of, hey, cash is king, right? That if there's opportunities out there and you're not liquid and have cash, you could miss the opportunity to invest. So I like that when there's opportunities, you see good values out there, we can get into good investments. But is there any problems with too much cash accumulating on the sideline in the big picture, kind of the macro picture, so to speak?
Well, the problem is that it's a fear indicator. So the more cash you have on the side, the more fear there is in the market. I think the big problem is if you're one of those people that has your money on the sidelines and you're not putting it to work for you, you can wind up in a spot where you miss out on opportunities, just like we've seen with the market coming back. By the way, hey Bob, and Mickey's in there too. LT is joining us, so we've got some people that are saying hello. It's good to hear you guys. But yeah, just like I was saying, if you're one of those people with too much money in a money market account, and I think it's always a good idea to have some cash available. But if you have too much available and you're not putting that money to work for you, then you're missing out on some opportunities that we have in the market. And not necessarily even in the financial markets, but there are other ways that you can generate income and other ways that you can make your money work for you during retirement.
And I think Zach, I think the underlying theme here is fear. And we're looking for alternatives right now. We're in an economy to where I can't just go to bonds like I used to.
Yep.
I can't go be in a safe place in CDs and get reasonable returns to where inflation's not eating my lunch.
Yep.
So I think that also just that, what do I do? And maybe that's something we can bring up in some of these other topics. What are some other options that aren't necessarily the known, tried and true for the last 100 years that I could look into? Because it's a different economy.
I was just going to say that it's a different time. So 6 minutes, 8 seconds. What's the next?
Oh, wow. We got to keep moving. Okay, so this one, this was in MSN Money.
Okay.
Investors approaching retirement face painful decisions. And it's a little bit like the theme we were talking about before, in that it was following the path of a doctor who in March got out of the market because he's 62 years old looking to retire. And in his story, he's sharing, hey, half of the world out there is saying it's done, we're recovered, it's just going to go up, and we're in a better place now. The other half is saying, hey, the other shoe's going to drop. And his story was just highlighting what I believe is a big portion of the population out there just saying, I'm scared because I don't know which to believe. So the safe thing is maybe to be conservative with that. So thoughts there?
Yeah, I think being conservative with your capital is very important. I think protecting the retirement wealth that you put aside, your nest egg, should always be your top priority. But one of the things that I'm concerned about right now is that money just parked on the sideline is going to be worth less and less as inflation comes in. We've had something like $3 trillion. No, it's more than that, but it started with $3 trillion and it's actually increasing of stimulus money that's coming in. And the problem is that whenever you put too much money into the economy, each dollar that's left in the economy is worth a little bit less and less and less and can buy less. And so if you're scared, if you're sitting on the sidelines and your money is becoming worth less as time goes on, that puts you in a place where your indecision is actually hurting you.
Right.
And that's why I think it's important to have a balanced approach. And that's what we talk about. You and I both talk about this a lot at Average Retirement, of having some money in dividend stocks that generate extra income, having some money in gold that actually can help protect from the inflation, help protect you from financial back and forth. Have some money in cash so that you have the money to be able to spend on your expenses. Have some money in real estate, because that's an area that has a lot of opportunity right now. So instead of freezing and just pulling cash, saying, all right, I'm going to have a balanced approach, and that way, if this area does well, I'm fine. If this area does poorly, I've got 3 other areas that might be doing well, and it helps to balance out those back and forths in different areas of the economy and different areas of the market.
And I'm with you on that. And that what jumped out at me about this article, Zach, was I don't know what to do. Do I play it safe, or do I roll the dice and go out in the market? And from a strategic perspective, which is really my background, let's get some clarity, because there's a portion that you can roll the dice because you probably have a time frame to do that with, and there's a portion we might need from income in next year or the next year after that, and then we do want to keep that. That might be the liquid piece, right?
Yeah. There's an old phrase that scared money is dead money.
Right.
We definitely don't want to be approaching the market in a fearful way.
All right, keep moving. So next.
Hey, Gamble, thanks for being here.
We got more. All right. And remember, in this next segment, we're going to be answering questions that came in this week. So if you have a question, you're streaming us live right now, let us know what that question is.
Yeah.
Next article, Zach. Instead of saving a total sum for retirement, like that magic number, right, I started thinking about how much I wanted to earn monthly, and it made me change or reassess the way I invest. I thought that was a great article. in the context of this environment, some things that haven't said, hey, maybe that $2 million, $3 million goal, maybe that's not the most important thing.
Yeah, I think there was a series of commercials that I won't name the name, but a particular
What's your
brokerage
number?
put out. Yeah, what is your number? And
Right.
there were people walking around with the numbers hanging over their head, and that actually can be a weight.
Mm-hmm.
You know, if I have to get to $3.2 million to have the retirement that I expect. Well, no, it doesn't have to be that way. Actually, I like this approach of how much income do I need? What do I need to cover my expenses? What do I need to cover my goals? Am I going to spend $3,000 every quarter to travel? Okay, let's build that into the
right.
But it doesn't necessarily take $3 million to have that level of income. And there are other creative ways that you can generate that income, whether it be some things that you're passionate about that actually could pay you you're still retired, but pay you to take some time out of your day to do these things that you
right.
enjoy and be able to generate some extra income. There are a lot of creative ways of doing that. And so then all of a sudden you don't need that $3 million, whatever that number
right.
is, but you are actively watching your finances carefully to make sure that you have the resources to live that rich retirement, to enjoy the things that you love in life.
And what bothers me with that question, Zach, is I'll get that question with no context, right? What do I need? What is that number? Is it that $1, $2, $3 million? And here's the reality. I've done this with over 3,000 families. I've seen people with zero save, but with huge pensions that were fine. They could afford to retire. And I've seen people with $2 or $3 million that couldn't. So it's completely specific to your situation. So the real thing is there's no magic number except your cash flow number.
Yeah, no, that makes sense. All right, good. We got less than a minute left. Let's keep moving.
Okay, so we're going to do one in a minute. I like this.
All right.
I like this. Let's see. Let's go to how the Fed is driving savers to riskier investments.
Mm-hmm.
And this was in the Washington Post. And just talking very specifically about where we are, why don't you speak to that?
Yeah, so the Fed has actually cut interest rates to 0% as far as their target rate, and it's caused all kinds of interest rates, the interest rates on mortgages, the interest rates on savings accounts, the interest rates on CDs and treasury bonds that you can invest in to go to zero. What that means is if you're retired and you need income, you have to invest in something else. And the article that you're talking about, I reviewed it as well. It's saying that you have to invest in riskier things. But Beau, there's actually a real big shift right now in what is risky and what is not risky. So some of the bonds that we used to think were safe, they're now actually, especially long-term bonds, they're more risky because if interest rates come back up,
right.
the value of those bonds will drop. And so that actually could hurt you if you're not planning for that type of a thing to happen. Whereas many of the solid companies like a Home Depot that pay good dividends, you can buy shares of Home Depot and you get paid a whole lot more than these low interest rates. Another name that I really like is AMT, American Tower Company.
Right.
They're part of the whole 5G thing. So as more people are working from home and they need fast internet, American Tower rents space on their towers to AT&T and Verizon and Sprint, and so they generate income and they pass that income on to investors. Another one is Procter & Gamble, a good, solid company that's not going to go out of business anytime soon. Hey, remember the toilet paper shortage?
Hey, they were in the right place at the right time.
They were, but they're always in the right place at the right time because they sell the things that we buy no matter what's going on in the economy. Those are investments that, in this article, they talked about them as being more risky because they're stocks instead of bonds. But honestly, in the way that our economy has shifted, this actually gives us less risk if you're able to invest in some of these strong companies that generate reliable income over time.
So maybe that alternative we've been looking for. I got to call time.
Yeah, I know.
We were in like 2-minute bonus. We're going to get better at this as we go, the 10 minutes and 10 minutes. So I'm going to reset, Zach, the 10 minutes for our Q&A.
Okay.
So why don't you set the table for what that's about, let people know. Hey, let's also talk a little bit about that 1+1 idea.
Yeah, for sure.
Okay, I'm going to reset.
So I wanted to, as we reset the timer, the next thing that we're going to do is spend 10 minutes on your questions that have come in. So if you've got more questions about what's going on in the economy, about how to manage your retirement, about how to generate this income, about how to live this rich retirement, now is the time to send those in via the Facebook page. And we've also, if you don't get a chance to send those in via Facebook, you can also email them to us, and we'll be using these for future rich retirement, either podcasts, broadcasts, or the articles that we write, and you can send that into feedback at richretirementletter.com.
Very good. And the 1+1, while you queue up that first question, Zach, so how we're going to do this and how we're going to grow this, many of you here, those of you watching or listening, or even a replay later on, we appreciate you, right? You're why we do this. We do this because we want to know what it is you need, what kind of information, topics you need. So we appreciate you for showing up, because that means you're a fan, so to speak. Zach, did you know you had fans?
I love it.
There you go. So what we ask is that if there's value here, and you know people, maybe friends in the demographic that are interested in the things we talk about, we say, hey, you're one fan, why don't you potentially help us out by sharing with one other friend, and we're going to grow this way.
Yeah.
And that way we're going to be able to continue to help more and more people, which is really why Zach and I do this. So first question, you got it queued up?
First question, yeah, we got this in from Gamble Robert. So Gamble, thanks for being on the call. And Gamble's actually asking, when he files for Social Security, and this is up your alley, Social Security spousal benefits, does he have to set an appointment and go into the local office, or is this something that he can do through a form? And that's especially important, especially with the coronavirus, and it's more difficult for people to get out safely and go into an office like that.
Yeah, the good news with the spousal benefit is you can apply for it through the socialsecurity.gov portal. So you can go in and you can apply for that, and when you check if you're married, depending on when you were born, now if you're born before January 2nd, 1954, there's going to be a little bit different rules for if you were married, if you were born after that. But what happens is if you check you're married and you were born after that 1954, which is most people we talk to these days, it's going to automatically apply you or qualify you for the highest benefit that you're deemed to have out of all the benefits you're eligible for. So simple answer to your question, yes, you can do it. And one of the most important decisions you can make is if that spousal benefit's available. We see people all the time, Zach, the sweet spot is from say 66 to 70 years old, leave that spousal benefit on the table and delay it. And sometimes it's to the tune of an additional $40,000 to $60,000 that could be invested or used elsewhere with the course of the retirement.
Yeah, that's so important, and you hate to see money left on the table like that.
Right.
That can be tragic. So moving on, this one's probably a little bit more for me. Rudy, thank you for your question. We appreciate you. When the sideline money comes into the market, isn't inflation likely to go up exponentially? So I do think that inflation is likely to go up. There's a lot of debate on whether it's going to go up exponentially and we're going to have a crisis, or whether it's going to be that slow and steady erosion that you don't see until you wake up one day and you're like, wow, that money that I've hid under the mattress isn't really going to cut it anymore. I do think that we're seeing some inflation in the market. So it's interesting the different ways that we measure inflation. Right. The CPI is kind of the government's way of measuring inflation, but it doesn't really do the same thing that it should do as far as telling you what inflation is doing to our economy. We are seeing stock prices move up because of inflation of financial assets. And so, yes, as this $5 trillion that's on the sidelines comes into the market, it could send that market continually higher. And many of the investments that we're talking about that this scared money is going to move into could be great investments right now. That will continue to rise in price as this money comes into the market. Meanwhile, if you're buying stocks that pay dividends, you're gonna get bonus in two ways. One is you get dividends that get into your account every quarter, and two is the value of the stock that you own continues to move higher as people buy.
Well, and there's a double-edged sword there too, Zach, right? Is that if that money stays on the sideline as we start to see inflation, it's that much more of a detriment to be in those cash low-yielding investments.
Yeah.
So we got to pay attention.
Yep.
We got to stay on top of this.
Yep.
Had a question come in. Okay. This has been coming in. For those of you that know my background, I actually still work face-to-face, knee-to-knee with clients. And a question I've had coming in a lot, Zach, is what's going on with gold? I see the prices going up. Is it just temporary? Is it something I should look into? Because there's so many alternatives out there that don't look so good. So what's the deal with gold? Why is it going up?
So why is gold going up? That has a lot to do with the extra money that the Fed and that Congress is putting into the economy. And it has a lot to do with fear in the market. People are worried about inflation, and they're also just worried about what in the world is happening in the economy. We saw gold actually move sharply higher after the financial crisis. And one of the things, so part of your question was, how long is
Right.
gold going to continue to move higher? Are we almost done, or is there a longer runway ahead? Gold actually peaked last time in 2011, which is 2.5 years after the worst part of the financial crisis,
Right,
where
that's
the
right.
government was pouring money into the market to try to help. And so if that trend kind of holds for us, we could be 2 to 2.5 years from the peak for gold right now. So I believe that gold, you don't want to put money that you can't afford to lose in anything.
Sure.
But I believe that gold is a great way of protecting your wealth, and owning some exposure to gold is really important. There are lots of different ways to do it. We've talked about many of them in the different rich retirement alerts that have gone out. Everything from financial markets, where you can buy shares of GLD, which tracks the price of gold,
Right.
all the way to actually owning some gold that you can put into a safety deposit box. So physically, tangibly, you have your hands on it, and it's worth more and more as the price of gold moves higher. But yes, I think it's a really important part of growing your wealth, protecting your wealth, and I think there's still a lot of room for gold to keep moving higher.
And from a strategic perspective, right, I like it as a diversifier.
Mm-hmm.
I get nervous when somebody says, I want to put 95% of my assets
Yes.
in gold, but I like it as a diversifier, and it functions to hold its value. Right, that's what I was always taught going way back, is that, hey, an ounce of gold that might buy a nice suit 50 years ago,
Mm-hmm.
an ounce that probably buy a suit today. It kind of holds its value over time, and it functions different, and just understanding that.
But a dollar amount won't buy a suit. You know, it
Necessarily,
costs
right.
maybe $5 to buy a nice suit back in the 1800s, and
Right.
$5 won't buy you a button on the suit.
Exactly. So that's good. The difference between gold and a dollar.
Yeah.
Well, I did see a quote I wanted to run by you because silver's fascinated me.
Yeah.
And the quote was, "Gold will often open the door, but silver will come through."
Yeah.
Now, is it an opportunity for silver to kind of exceed the potential growth of gold in this?
I think so. So silver actually has had some really strong runs, even just in the past few days, as we record this here in July. Silver, I believe, is more speculative than gold.
Right.
So it moves more quickly, both up and down. And so I agree with that. The gold kind of, it plods, it kind of opens the door, people start getting excited about it, and then silver can kind of run through. I like to think of silver as like a fighter jet versus gold maybe being a passenger jet, and silver can change directions and go up and down really, really fast, whereas gold is typically more of a steady mover.
Right.
And so as the trend moves into precious metals, silver is a great way to be a little bit more speculative.
Right.
Gold is a great way to be maybe a little bit more protective, but they both have their place.
So maybe even further diversified. And I knew, Zach, I knew somehow today you would work in a plane reference. So there you go. There it was.
Exactly.
All right. Let's see. We still got a couple
We got
minutes.
3 minutes left. Let's get to a few more. Let's see. So this one, more on your side, Beau. Should I take Social Security early and let my investment accounts grow?
Oh, okay. So this, I'm
This is a
curious.
yes or no question, right?
Well, kind of. And it's totally. I'm curious what our difference would be in this. So should I take my Social Security early, or go ahead and take assets and let my Social Security grow? I want to share the factors we have to consider to make a good decision.
Yeah.
Right. One, Social Security in most cases is going to be lower taxed than for most people what's their retirement assets, which are 401ks and IRAs.
Yep.
Social Security has a cost of living adjustment.
Okay.
Something to consider. And then the third thing I want to consider, especially for our couples out there, is we need to model and see, okay, it's not fun, Zach, but what happens when a spouse dies? People don't think of the double whammy. Income drops by about a third, and taxes actually go up. So there might be that might be a reason we delay our Social Security, because remember, the second to die or the surviving spouse keeps the larger Social Security benefit. So we want to pay attention. Why I got into doing all the Social Security research several years ago was a really good friend of mine, really smart guy, business guy. He worked into his early 70s. He called Social Security. He claimed that benefit at full retirement age because they told him he might as well, because he can earn as much money as he wants. But later he realized it was to the detriment of about $1,400 a month to his wife, who will probably outlive him a good 10 to 15 years in their scenario. So we want to pay attention to those three things to make a good decision.
Yeah, I think that's important. And then just layering onto that decision, what are the investment returns that we can expect to get?
Right.
And that would depend on how aggressive you want to be in your investing, and also it actually depends on how disciplined you can be with your investing.
That's true.
We actually, I was talking to some of our rich retirement people just this week about how many people don't earn the same amount that the market gives them because people make bad decisions about selling when things are fearful and buying when things are appear to be okay. But what winds up happening is you buy at a higher price and you sell at a lower price. So that's an important thing to consider if you're going to be investing instead of taking Social Security.
Right.
Another one here, Bo. My company offers a Roth 401k. Should I use it versus the 401k, the regular traditional 401k? And is it the same as a Roth IRA? So yeah, Roth versus traditional, and what's the difference between the 401k and the IRA side?
So I love Roths, any kind of Roths, and I know you're going to appreciate this, Zach. Is I'm concerned with one of our biggest expense in retirement is already taxes.
Yeah,
it's pretty much going to be taxes.
And just to explain, in case you're not familiar with the two sides, a Roth means that you pay taxes to begin with when you earn the money, and then you put it in your retirement account, and you never have to pay taxes on that money, even no matter how big it grows, for the rest of your life. Right.
And there's a couple things that does. Having money in a tax-free distribution investment like a Roth, that protects us from RMDs in the future. Those Roths are not subjected to RMDs. Although that Roth IRA, the Roth 401k, you do have to take an RMD, but it's not taxable.
Is a required minimum distribution
that you now have to take at 72.
When you're 72, they require you to take a certain amount out of traditional IRAs, but not out of Roth IRAs, and traditional 401ks, but not out of regular or not out of Roth.
The Roth. So the benefit of the 401k, the traditional, it'll pull down your taxable income for the year. But again, as opposed to, I like thinking about how this plays out over the next 20, 30 plus years of retirement. And the fact that Roth can protect us from the RMDs, they can protect us from future tax increases. And Zach, with the $3 trillion we started with, plus the debt we already had, I'm almost certain, I feel really confident to say we're going to have future tax rates and higher tax rates in the future.
Yeah, no, that definitely makes sense.
So I'm a fan of the Roth.
All right, well, that's it for our 10 minutes. We gotta respect everybody's time. So thank you for.
That was so fast.
It was. We went through it quick, and that means that we'll have to do it again very soon because it seems like we've got some good questions coming in. Well, could you pick one person and give out your gift, and then I'll give out the next one.
Let's see here. Who do we have? I'll have to hop in and see who was participating here.
Yeah, I like, so Dan Nichols was saying, he was saying hello. We've got Gamble, who asked that great question about Social Security spousal benefits.
Okay, that's it. So Gamble asked a good question about Social Security. So Gamble, you're going to get the customized Social Security book. If you'll just make sure you can DM in the group here or Zach, and just make sure we got a mailing address for you, and I'll make sure that book goes out this week.
Yep. Or you can email us at feedback at, actually it's richretirementfeedback@stpaulresearch.com.
Okay.
I think I may have said that wrong earlier, but you can email us at richretirementfeedback@stpaulresearch.com. The gift that I wanted to give out, we've got a Tiffany pen.
This is the big one.
The big one, yeah. And I wanted to send that out to Rudy. I believe the pronunciation of your last name. Well, Rudy R. You know who you are. You've had some great comments and some questions that we've been able to talk about with inflation. So please send us your address, and we'll send you that care package. And appreciate you being on. And then I also wanted to give away one of my Big Book of Income copies. And let's give that to Robert James. Robert was one of the first. Robert Jones. Robert, you were one of the first people to say hello, and it's Bob, and I'm stumbling all over myself here.
Robert, Bob, hey.
Bob, thanks for being here and for being here early and saying hello. Send me your address, again, richretirementfeedback@stpaulresearch.com, and we'll send you a copy of the Big Book of Income. And hope you guys enjoyed this. Would really appreciate your feedback. That whole 1+1 thing that you were talking about, Bo.
Let's like the page first.
Yep.
Like the page, share the page, and let us know. We do this again. What topics do you want us to bring in? What questions do you want us to answer? Use this as a resource, and we'll do the legwork, right? We'll go pull it together. We'll go do some research and throw some good ideas out there. And just kudos for all of you for showing up, because Zach, I found those that do this kind of work, they show up, they research, they learn information. I call it that raising your retirement IQ. They're the ones that do the best in retirement.
Yeah, absolutely. No, that's great. Thank you guys for being here, and we'll see you next time.
See you next time.